Good day, everybody. It's Dan Basse and Ben Buckner back with you in 2026. Happy New Year, everyone. As we come back to new markets in a new year, everybody's asking a question about is anything changing? What does the year ahead look like? And I think Ben and I are going to dive into that this week and in weeks to come and talk a little bit about the opportunities. On our daily wires, we're doing a deep dive into things like E15, 45Z. RVOs and reallocated SREs. And what does this mean to the agricultural industry? And hopefully you'll follow our wires and go forward on that. But I think that's the big key as we think about the markets in the year ahead. And so as we look at the markets today, unfortunately, we still end up in the same spot where we were late last year. We have bearish price trends. We're getting a little bounce. The Chinese are now up to about 10 million metric tons of buying from our count. That means that they bought about 1 million metric tons yesterday by all estimates and my cash connections. And so as we come back at the markets, the thing that surprised me is that we didn't see an increase in open interest overnight on Monday. So we didn't see the influx of speculative interest that many people were talking about. That being said, I do think many people are waiting until the crop report that comes out on Monday. That report is likely to show a decline in U.S. corn as a yield from our estimates, a decline in U.S. winter wheat seedings of about 1.5 million acres, but maybe a steadier increase in soybean yield. So as we all put it all together, we still see downside potential, but maybe not to the degree that we saw in the last 6 weeks, where soybeans dropped $1.30 a bushel. Corn is still inside its range, and wheat is now down at the lower end of its 10-year range. So Ben, kind of take us where we are today. And I think what you're going to highlight is that we've got this world abundance of wheat, and maybe Argentina is being very cheap and selling its 10.5 or low pro wheat.
Yeah, that's right. And I think, the last several weeks we kind of struggled with how does one change balance sheets from here pretty meaningfully. And the stocks report next week will give us some guidance on that. But I think for now, at least prior to that release, everything is fairly priced. So as we always do, we're asking the question, what's next? And I think it's still, with what we know now, it's all about whether that is what changes balance sheets the most, for good or for bad. But probably looking at a lot of market inactivity, at least for the rest of this week. But I do want to point out some things, and they are all, for the most part, supply based. So the world wheat market, counter seasonally, except in the US, is moving lower. And this is all part and parcel of that all-time, by far, record exporter wheat crop, up 1.5 billion bushels from last year. So that is basically a U.S. export program times 2 that exists in the world wheat market as a surplus. And so, that makes total sense that the Argentine wheat market, lower protein wheat, easily buyable below 200 per ton. The high protein wheat market in Argentina can be bought for $215 a ton. U.S. Gulf hard red today is $245. The Russian market, interior cash prices and FOB offers moving $2 or $3 per ton lower this week. That is highly unusual. Usually the Russian cash wheat market is pretty rigid, behaves like the U.S. corn market, for example. So you have lows at harvest, you move slowly, steadily higher into the spring. We have just not seen that be the case this year. And I think that's telling us that, despite having gone almost 6 months into the international wheat crop year, that market's still looking for adequate demand to clear excess supplies. And I think the market's telling us it hasn't quite done that yet. So the importance here is that U.S. wheat export demand probably stays pretty challenged for the next several months. And seasonally, importer demand for wheat does peak by the end of winter. So as new crop harvests get closer in places like North Africa, the Middle East, they're going to be less interested in seeking new supply. So wheat market just kind of stuck with an incredible amount of supply. And that doesn't really change, I think, until you get into the new growing season in April, May of this year. Corn demand also, we've seen pretty incredible interest in U.S. corn. Part of that is because Ukraine's left something like 10 million tons in the fields to dry over the winter, and also just lower production in total. And so that's funneled a lot of demand to the U.S., and it's been very, very good. But all of a sudden, I think you got to keep this thing going every single week. And so something that we've kind of highlighted is, at least based on the FGIS export inspections pace, we've fallen short the last 2 weeks of the pace needed to meet the USDA's forecast. So there's kind of a birding, and the scales may be tipping a little bit that we are getting a lot of corn export demand, but do we need more to justify USDA's forecast? Like you mentioned before, that implied feed residual number is going to be really, really important. I'd say very clearly up front, if that number is not next week 2.6 billion bushels or higher, the USDA eventually has got to trim that number by a couple 100 million bushels. So there's just a lot of stuff. And I think while South American weather is, everyone can see and feel this, really the absence of threats outside of maybe parts of southern Argentina, I just wanted to highlight again the crop cycle there. So we have seen evidence of harvest starting already in northern Brazil. I think IMEA in Mato Grosso will report harvest progress there starting this Friday. And you kind of see here, let's focus on the black line, the average line, which I think will match or be close to this year. We're going to be 50% harvested by February 5th. So that is almost 1 billion bushels of soybeans in the physical cash market. So the soybean market in Chicago, I think we'll debate what China is doing, what is fair value, what are U.S. implied in stocks. But actual supplies will be getting larger, not smaller, over the next 60 days. So how does the market contend with that? Does that act as kind of a weight? And then we just don't see any threats. Even in Argentina, where it's been dry is where it was wettest early in the season. So what you're seeing here is 60-day % of normal rainfall. And on the right, vegetation health compared to normal as of January 3rd. And so you dig into the details here, and some select and important locations are seeing the highest NDVI on record for this time of year, at least. So again, we'll debate whether Brazilian crop size, the soybean crop, is 177 or 182, but it's going to be big, just kind of a matter of how big. And that's coming at us again in the next 45 to 60 days, physical supplies. This is what the 2-week forecast looks like. So every time we kind of start to build some maybe La Nina-based dryness in Argentina, just goes away 5 or 7 days later. It's kind of, we're left with this very routine South American pattern. We're now peaking into the second half of January. Time, even in Argentina, starts to run out to build problems once you get to February 1st or so. This is what soil moisture looks like in Argentina today as well. I wanted to highlight just where the corn and soybeans are concentrated most. So what we're focused on is Cordoba, Santa Fe, and that sort of northern third of the country, and things look very, very good there. So again, is that going to be the surprise? Argentine corn, not crop size not being 2 million tons higher than USDA's forecast, but 5, 7, or 8 million tons higher. I think that is a risk we'll have to contend with if normal weather continues for another 6, 7 weeks. The Argentine crops today look very good. Soybeans 68% good to excellent. It was 62% the same week a year ago. Corn crop 82% good to excellent. That is historically high for this week. So I think we're just kind of waiting on changes on both sides of the market, whether it's supply or demand. But I did just want to communicate that as we get into the new year, one, the Brazilian soybean crop is going to come at us very fast, and then that's normally the case. But also, famous last words here, but so far we've avoided issues in South America. So we're pushing, I think, supply dislocation into the Northern Hemisphere growing season. So we got to wait another 4 or 5 months to debate that even. And so I think that's going to be a challenge for the grain markets.
I think you're right, Ben. As I said, we're still left with the same oversupply globally of grain, and that's not going to change. And it takes time to get rid of that. And the market needs to find the price to have that happen, which I guess in the wheat, soybean, and corn markets hasn't happened just yet. Everybody have a great trading day on Monday. We'll be back more frequently now. Hopefully later in the week, we'll have a rundown on our South American crop tour. Our Brazilian office is going through Mato Grosso, and we're very excited to share those results with you as we get into Friday. Be well, everyone. Happy Tuesday, and we'll be back soon.